to help you navigate and prosper in your business. It's all about creating wealth, legacy, and an online presence. Here's your host, Ceanne Livingston.
Welcome back to Big Money Influencers. I'm your host, Ceanne, and today I'm joined by Tobi Fisher, entrepreneur, real estate investor. Hi, Tobi. I'm glad you're here today. Welcome.
Great. Thanks for having me.
I just have a few questions I wanted to ask you about your business and your investing and see what kind of nuggets you have to drop. You are a man with a lot of knowledge and information and many things to share. In a nutshell, what do you do?
I am an investor. I'm a full-time investor, predominantly real estate. I like to say that I'm semi-retired, which is half true anyhow, because I work half the time and half the time not. That's what I do. Predominantly real estate in 3 different states.
Do you have an ideal type of customer or client or person that you work with?
Most of my assets are real estate and their property, and they're everything from retail stores. I have a tenant, a household name tenant, and then I have other people, residential tenants, just mom and pops, industrial space, office space. It varies. So those are my customers.
Wonderful. How did you get started into real estate?
So I was 18, maybe 19, and I was painting a building. And the owner of the building, as I'm painting the owner of the building comes up in flip-flops. He had just been away for like a month and driving his car and didn't seem to be working very hard. And there I was painting his building, and it was a July day, so it was very hot. And I started thinking to myself, that's probably a better, easier road than painting buildings. So that was really the idea. It also had a lot to do with how I grew up. I grew up in a very poor household because my grandparents were very wealthy. He had his Olympic-sized swimming pool, 5-car garage, the horses, the estate with the elevator. This was a house that had an elevator inside the house, to give it some perspective. A beautiful English Victorian. And then we lived in this old farmhouse that ultimately got condemned by the Board of Health. So that contrast really kind of stuck with me. And real estate just seemed like an investment vehicle that I could wrap my brains around, partly because I was painting. That's when the idea of real estate first came in my mind.
That's great. That was a smart decision for sure. So what type of, I've dabbled in real estate, and if someone was wanting to get started, what would you recommend would be the best path for them to go?
There's so many different ways. The easiest way to start is with, multi-families, 2 families, 3 families, 4 families, because they're fairly attainable in that, getting the financing. So I started by living in my property. So I lived in a number of my properties. So I would move into a property, I would rehab it, fix it all up, move to another property. So, I think the easiest way to get into is with multi-families. And there's a lot of different, get into office space, industrial and retail requires probably more capital than a lot of people have access to.
Question that I didn't give you, and I've been pondering this a lot with all the mortgage moratorium because of COVID. Do you think there's going to be a big hit coming up and a lot of foreclosures coming up on the market?
If I had a crystal ball, I could answer that question. If you just asked me to take a wild guess, because, despite I've been doing this now since 1996. So I've been through a couple down economies. Sometimes my predictions have been correct, and sometimes I just didn't see it coming. I think the eviction moratorium is going to end, maybe not right away, but this year I think it's going to end. I think in what we would call your working poor or your poorer communities, I think those are the areas going to be hardest hit. Folks that are dealing with real estate in some of your better communities probably had people who are doing credit background checks, had decent credit, and they probably are paying the mortgage. So those properties are probably not going to be in problem. It's going to be the ones that were kind of on the fringe to begin with. And so these people were living paycheck to paycheck. They might not have had the greatest credit when they moved in. And that was just the kind of market that was in. So I think unfortunately, this is going to impact your poorer community. So what does that mean? There might be foreclosures. I don't think it's going to be this year, though, because I think there's enough money pumped in the economy. I think this year will be a rosy year. So maybe next year, but that's a guess.
Yeah, that's all we can ever do is guess, right? And then when it hits, it's like a total shock. I know.
That brings up another point that I think is really important. I've been around long enough to know that anything can happen at any time. And so one of the things as an investor is it's a simultaneous act of planning for the worst and planning for the best at the same time. So when you first get started in investing, at least I did, I leveraged myself. In other words, I borrowed as much money as I humanly possibly could and just went all into real estate. And that's, I don't know how else to get in without, really, I didn't have any money to start. So I had to, use every thing I could and leverage myself. And then as time went on, I've become more conservative. I mean, and largely because in the last recession, it came near close to taking me out financially. And I've seen any investor who's been around for a while, they've certainly had their heartaches. And that's just part of the business. So my point is it's not that I would be taken by surprise, and I hope things stay rosy. I really do, but I do prepare for the worst at the same time. So it's investing and being proactive, and yet at the same time being cautious. And if you're newer in the game, at least as I was, you probably have to be more proactive just because you don't have the ability to raise capital otherwise.
Do you work with people and help them to get into real estate investing at all, or do you just do private deals? Or
I do private deals. I mean, I've helped plenty of people. I actually used to coach. I actually coach people. I did that for a while. So, yeah, I do help people. A lot of people helped me get going as far as an investor. One of the things that even when I coached and I taught people, I could not, people have this idea that, they talk to their friends, they talk to their neighbors. None of them are investors. They're not in the business, and they're all going to tell you all the terrible things that could go wrong. Mm-hmm. And they're all true, by the way. The way you become an investor is you take risk, you take calculated risk. And you really, at least I really couldn't listen to the people who I was closely associated with because, my very first deal, I had a good friend of mine and a contractor who he looked at my very first property, and he said, "You're out of your mind. You can't buy this. This is a complete terrible thing. Don't do it. You lose your shirt." I have that property under contract now for 6 times what I paid for it. I do help people. I don't do it professionally. My main objective is to be semi-retired, work easily and effortlessly, making as much money as I sleep was while I'm awake. And I do a pretty good job at that. My wife and I, we were away at Florida for a month, and we got back a few weeks ago. So I really try to have that balance now. For me, it's not all about the money. It's about the lifestyle.
That sounds awesome. Love it. Love it. Love it. So we had talked previously kind of about real estate investing education and the difference between going to a seminar or a conference or even a summit and getting all this knowledge but not doing anything with it. What would you recommend would be some major steps or tips to actually take action from all the information you learn?
I think, first of all, surround yourself with people that are actually doing it, whether it's an investment group, a mastermind group, something like this wealth seminar, to surround yourself with people who are actually doing it. And I don't mean the people here's the challenge with I've been to plenty of the real estate seminars, and all the techniques work, by the way. I can tell you that some of them don't work fast. Some of them don't work the first time. And some of them do work, at least for me, they worked right away. But the challenge is that the vast majority of people that go in there, they get some technical information, but that didn't solve the fundamental challenge, their emotional. Going out and investing, it's not gambling, but it can be nerve-wracking because you can do all your homework and still make a bad decision. And that's very nerve-wracking for the average person who works a job and wants a retirement and wants safety. To go out and take all the money that we've worked for all this time and then go invest in a deal that can go sideways can be challenging. So surrounding yourself with people who are actually doing the business successfully, not people talking about the business, people that are actually in the business, ideally people with more experience. And people, you would be amazed at how open investors are with sharing what they know with other newer investors who are actually doing something rather than just talking about doing something. So I think seminars, the seminars are great. The wealth webinars like this are great. And I think finding people who are actually out there that you can talk to, that you have a relationship with. And they're out there. If you look, they're out there, whether through investment groups. Now we have Zoom. There's so many different ways to interact with people who are actually doing the business.
Learn the secrets entrepreneurs can use to create wealth and legacy. Discover exactly how the top 1% are building financial success, wealth, and a legacy quickly in their business. These are the only secrets you need to create wealth and legacy when it comes to building your online presence. When you visit BigMoneyInfluencerLive.com, you will get free access to the exclusive Big Money Influencers Live Business Kit. It teaches proven secret strategies that successful entrepreneurs are using daily to create wealth and legacy in their business. Foolproof methods established business owners are using to live and build wealth and legacy. We know you're busy, so we have convenient audios which include foolproof methods established business owners use to build wealth and legacy. Easy to follow binder notes. And if you're ready to 10x your online presence or ready to take your business online, you can book a call and discover how to get started. Visit bigmoneyinfluencerlive.com. That's bigmoneyinfluencerlive.com.
That you can talk to, that you can have a relationship with. And they're out there. If you look, they're out there, whether through investment groups. Now we have Zoom. There's so many different ways to interact with people who are actually doing the business.
That's great advice. How can they reach out to you to take the next step to?
I would certainly be open to it. That is not, I don't have maybe I should have a product to sell here. I don't. My primary job is building my own portfolio, but my phone number is 781-361-7005. 781-361-7005. And I'm happy to talk with people who want to get into the business, don't know where to start. There's a lot of books out there. There's a lot of information. You're offering a great product that can help people. There is no magic answer. There isn't so many people who want to get into investing. They think there's some specific formula. If I had this exact number that I could punch into the computer and $1 million would pop out of the computer and I knew it would work, that would make me confident. There isn't. That doesn't exist. At least I haven't found it. And if anybody finds it, again, my number is 781-361-7005. Please call me and tell me. And I'm happy to help people out. A lot of people helped me out along the way. It's interesting because I've had mentors, a number of mentors, and these were just people who, either I knew somebody who knew them or said, hey, can I have a conversation? And all those people, at least when I first started, had substantially more real estate experience than I did. And now here we are years later, I can think of at least 3 of those mentors are now calling me, asking me. So the relationship shifted because my business is bigger. And I still have one mentor who he still has a much bigger business than me. And he's, but that's not necessarily how I gauge success. I gauge success on, so the idea is to create this money and to do what with this money. I want to do what I want, when I want, with whom I want. So that's what the money's for. So,
right.
So my grandfather was a really phenomenal role model. He retired when he was 50 years old. And that was it. And he, believe it or not, he had a vision since he was 18 years old. He read a book that talked about the philosophy. Actually, within the book, there was a line that said, any businessman, because this is written in the 30s, said something to the effect, any reasonable businessman should retire at age 50 if he can do so. And my grandfather took that at age 18 years old, and he had his retirement party on his 50th birthday.
That's awesome.
And he always said, he says, I could have made plenty of more money. A lot of my classmates made a lot more money than me, but I had more than enough. And the truth is he had more than enough to do. So he and my grandmother traveled around the world for almost, 40, she died at, so it was 47 years, 44 of those years, they traveled around the world extensively. Africa, Indonesia, they had houses in St. Martin and Dominican Republic and in Florida. They'd sail between them all. They go fishing in Canada. So he wasn't, he didn't have the yachts and the airplanes. He had exactly what he wanted, which was his 3 little houses in the Caribbean. He could sailboat and his fishing place up in Canada and he also liked wildlife in Africa. So I think building wealth is, okay, what do we do with this wealth? What's the point of it? Is it just a measuring stick? Who has the most amount of money wins? And that's a lot what drives my decisions now. It's, I can make a lot of money doing certain things. And then the question I go is, well, why? What am I doing? How does that fit my vision now is to easily and effortlessly create wealth as much as asleep as while awake. It's not to say that it goes like that every day. And it's not to say I don't have responsibilities. But when it comes to a new business venture, if it doesn't fit that profile, I don't want to do it. So I used to have had a laundromat, right? Great money maker, right? And I saw the entire world through making money and what was a good investment and you had to work hard for money. And as long as I saw it through that lens, laundromats made perfect sense. And then when I finally came to an awareness, is wait a second, there seems to be a lot of people out there making money and they don't seem to be sweating like I am. And so maybe it can be easy. And that little shift of awareness which was really only about 5 years ago, really shifted my vision so it went from laundromats to solar farms. It was actually really pretty easy, much easier than a laundromat.
Did you say solar farms?
Solar farm, yeah.
Nice.
So I have a solar farm and it creates energy for the next 20 years because they seem to last about 20 years. This thing's about 3 years old. So I got 17 years left of this thing just churning and it puts the money in my account. I don't have any tenants calling me. There's no broken washing machines. There's no plumbing.
Right.
Like I said, I am predominantly in real estate, but I do other things as well.
I'm definitely going to have to Google the solar farms because solar energy is really, really popular here in the state of California. In new constructions, you have to put the solar in. That business is booming for sure.
The tax benefits were unbelievable. It really was. It was a remarkable deal. But again, going back to, I think what's really important for an investor is to have some type of vision. Like I literally had, so one of the things that drove me is in my mid 20s, I made a bet with my grandfather that I would have more money than him. So he had a certain amount of money when he was age 50. And that by the time I was age 50, I would have more money than him. And we actually wrote up this bet. I actually have it right on my desk right here. I can show it to you. This is a little hard to see, but It actually has some numerical numbers in there. It lists his properties and how we were going to adjust for inflation. So this thing right here is 26 years ago that we wrote that. Like my grandfather had this vision from a young man, he was going to retire at 50. I had this vision, and it was just to beat him. That was it. It was, I want to tell you there's some bigger spiritual meaning. It was a ego-driven bet by a young man. And my grandfather, I think, probably knew exactly how to get my goat, to get me to move. And so for a lot of years, that was my vision, to create more wealth than him as defined by this formula. And that my vision has changed over the years. And I've actually taken time to write it out more in a paragraph statement. But I think a long-term vision is important. And that really helps me too also go, okay, my vision doesn't mean laundromats, but it could mean solar farms. So it really also helps me guide me in the opportunities I do.
How many years is your vision?
So this vision right here, so I don't, I have a 5-year, 10-year, and 20-year vision as of right now. That's as far as I've gotten on that. When I wrote that was 22 years. So I wrote that maybe 24 years because I wrote that when I was 26 years old. This bet on a paper plate I made with my grandfather, that's probably a poor example of a vision, but it's what I had at the time. My vision is actually more written out. It's like a page for each, 1 year, 5 year, 10 year, 20 year. That's how it helps me direct my focus. Without that, people are going to go look at a multifamily, whatever business opportunity, and then they're going to go talk to their friends, and all their friends are going to tell them it's a terrible idea, and all the people that they know that lost their shirt doing it, or they're going to get caught up in some get-rich-quick scheme. There are plenty of other ways to make money. The stock market has not been one of the places that I haven't lost, but that hasn't been an area that I've been able to figure it out very well. I would say emotionally, it's a different type of strategy. I tend to think more long-term than day trading, but people do that. I think it's a different thing. For me, the vision drives my energy. For me, it's really about, I have an RV. I bought an RV, a small one. It's like a van, so I can park it anywhere. I want to drive across the country. So I can't have labor-intensive properties or laundromats. That doesn't fit. That doesn't work. How to manage those properties while I'm driving across the country doesn't work for me.
Right. Well, that's not freedom.
That's not freedom.
So I have one more question before I let you go on with your day, because I love your contract that you made with your grandpa. I'm sure it built connection and relationship. And did you beat him? No, I didn't. So I'm 53 now, and I now technically have beat him, but it was a fascinating bet. So we had the crash in 2008, which really hurt. There was a period of time that I was actually probably worth negative money, just because I owed more money than the value of the properties, or at least what I could sell the properties for at that given time. And so that really started turning around 2013. So to have beaten him, it would have been 2017. So that would have been the year, because really at 2011, I was kind of back at zero again. I had to, re-engage the wheel. So that came. So I was short. No, I didn't beat him. We kept the bet going, and I did eventually beat him. But here's the fascinating thing, and I always wondered, because we joked around. I said, I'm going to keep you alive long enough that you can see me beat you. And he goes, I'm going to stay alive long enough to see me beat you. That was the joke that we had, because I still kept the bet, and we still did the same metrics. So I had to beat him, because everything he owned in 1973 when he retired was going to be adjusted for inflation or current market values. So he owned this sprawling estate in Milton, Massachusetts. Well, he sold it for $600,000 in 1973, but it's worth $3.2 million today. I mean, it's, that's the value of it now. So I have to keep meeting those numbers, right? So I did eventually beat him.
And when he was as he was, dying, it was like, I was close, but I wasn't quite there. So it was kind of a joke. Okay, did he say, like, I'm going to go now that I know that I won the bet. So it doesn't matter. It was a couple of years after the fact. There was a couple of things. I didn't win the bet in the sense that I didn't beat the number, but more importantly, because my vision changed, he had freedom. When he was 50 years old, he just took off. That was it. If he wanted to take off and go on a sailboat for 3 months and not talk to anybody, that's exactly what he did. That really is what I aspire to still. And actually, as in this current stage in my life, I'm really getting rid of a lot of my properties and changing my properties to less management intensive properties, like getting rid of a lot of the residential properties, which are pretty profitable, and getting into what's called triple net properties, which are longer, like a 20-year CVS or O'Reilly's Auto Part, or McDonald's, Burger King, whatever the case may be. And it's really just for that freedom. So no, I didn't beat him. I'm still, I beat him on the numbers finally. I'm still, when I get honest about it, he still created a lifestyle. So I'm 53, so I'm not far off, but he at age 50 had created a lifestyle that was undeniable. And if you want to measure, the quality of someone's life by the quantity of time they spent with family and friends, I don't think anybody could beat my grandparents. 40-something years that they were retired, hanging out with family, taking everybody on vacation. I mean, that went on for, if you think about it, 47 years of retirement.
Oh, he built legacy.
He built legacy. Yeah. It's
awesome. That's such an awesome story. Well, thank you so much for coming in and chatting with me. I really appreciate you.
Great. Well, thank you. I wish everybody well. If I had some other, like I said, people can call me. The reality is anybody could do it. I was flat broke when I started this. I had nothing. Not a dime. And my grandfather, by the way, although he had money, he gave me some loans over the years, and then I inherited some money. But when I was building my wealth, he didn't give me anything. He gave me $5,000 for my first house. He gave me some bridge loans, a couple of bridge loans. In other words, he would lend me some money and I had to pay him back within 3 months. And I think he did it wisely because, it's not that he wasn't a charitable man. It's like he knew that I had to figure that out on my own.
Mm-hmm.
And then once I figured it out, because I do know how to figure it out. I wish everybody well. If I can do it, I assure you anybody can do it. I started painting buildings. So that was how it started. So
that's awesome. Well, thank you so much.
Okay, great. You have a great day.
To discover the secrets entrepreneurs are using to create wealth and legacy, visit bigmoneyinfluencerslive.com. And here's a big ask. If you love this podcast, will you take a minute to subscribe, review, and give us a 5-star rating? Be sure and share with your friends and family. And thank you for listening.